Welcome everyone. Thanks for joining for this webinar with us today. Before we begin, I would just like to brief you about Jiraaf a little bit. So we are a fixed income platform and we offer fixed income opportunities with a yield range between 6% to 22% and with a tenor range of somewhere between 30 days to 3 years. Idea is to bring opportunities for people, for investors, so that they can build a fixed income portfolio across asset classes. And as per their risk appetite and as per the tenor that they want, this tenor can be linked to their milestones as well. Okay. Now moving on to our team. Second slide is up. Yeah. So Jiraaf was founded by Saurav and Vineet. Saurav has 10 plus years of experience and he has worked broadly in corporate finance and debt raising. He is an alumni of BITS Pilani and also an MBA from Ahmedabad. Vineet started his career with Axis Bank and then moved on to Piramal, where he was managing a $1 billion book. He is an alumni from XIMB. And on your screen, you can see rest of our senior management team, each of whom comes with a vast experience in their respective fields. We have raised some money from a few investors, which include Axel Partners, Capital A, Mantikar Family Office, and also a few entrepreneurs, Siddharth Shah, Dharmil Seth, Ronak Morbi, and Ramakant Sharma. These have been with us since the inception of Jiraaf. So this is a brief of various products that we offer, starting with the safest of them, which is a T-bill or a G-Sec. This ranges from 90 days to 1 year, and G-Sec can be up to 10, 15 years, which offers a product yield of 6.5 to 8%. Across corporate debt, we have two kinds of products. One is commercial paper and second would be bonds, whereas CPs are primarily unsecured. Bonds are offered with some underlying securities. And CPs are relatively shorter tenor, and corporate bonds start from 12 months and go up to 36 months. The yield range for this would be somewhere between 7% to 18%. Next, the most popular of all is our invoice discounting product, which gives opportunities between 30 days to 90 days and with yields going up to 14%. Leasing and venture debt are the other two products where we have done a couple of transactions. Leasing, Everest transaction is one of the examples where the underlying asset is the cars. This is a typically 15 to 36 months tenor deal and 12 to 18% of yields. The idea is to provide a diversified portfolio for our customers so that they have their options across different asset classes, different yields, and different tenors. Now, a little bit about our journey that has been so far. So the platform was launched in September 21, when at that time in 3-4 months, we had achieved 1,200 users and registered users and around 60 crores of investments with a team of 19 people. Today in May, we have close to 1 lakh registered users with investments that have been more than 1698 crores. And the team that is managing this show is around 77 people. Total repayments that have been done till date are around 1196 crores. So today we are here to talk about one of the clients that have been working with us since March, which is BIZONGO. I would like to introduce Ankur, who comes with a vast experience in the field of supply chain finance and currently is Director of Supply Chain Finance and Debt Raise at BIZONGO. His previous stints have been with PNB, Axis Bank, Udan, etc. Hi, Ankur. Can you Are you there? Can you join us?
Hi, Mudita. Thanks for introduction. Thanks for having me here.
Our pleasure. So, Ankur, we have this session to, talk about the B2B space and about BIZONGO, how it came up. Maybe we can start with how the name came up. It's a very unique name, and can you just brief us about the story behind this?
Sure. I think BIZONGO came up with a very simple notion that we wanted to target on the fragmented kind of a supply in the industries. And the biggest challenge that we seen in the packaging industry or in the textile industry was the fragmented supply across the board, right? And that completely challenges the end consumer, which is the large enterprises, in terms of ongoing supply of procurement of those materials and goods. And that's where we thought that business on the go has to be the conceptually the right way of the right attitude or the right jargon for this kind of problem statement. And that's how business on the go became BIZONGO. So yeah, I think that was the philosophy that the name came up with.
Very well. That's interesting. Biz on the go. Can we talk a little bit about the B2B space and because this is something that has been happening conventionally also through the years. There would be some suppliers and the companies that you connect with. So what is the value addition? What is the proposition here at BIZONGO?
Yeah, so broadly, I think B2B space came into the limelight during the kind of the timelines of pandemic. B2C was already in the market, likes of Flipkart and Amazon, wherein you can connect with multiple suppliers, multiple customers, get your required items, or mobile phones, or whatever it is. B2B space actually came into the limelight during the pandemic, wherein the logistics, the supply chain, the financing, the collections, everything took a huge toll. And I think it was also a phase where the digital adoption or the technology adoption was at its peak. So I think that is where the B2B startups actually came into the picture, and each one of those B2B startups started scaling up in that moment. At BIZONGO, so typically, just to give you a brief history about what we are and what we were and what we want to be. BIZONGO was started by three IITians, Aniket, Ankit, and Sachin, about 8 years back. The idea was to cater to the needs of large enterprises and customers in terms of procurement. So BIZONGO is an e-commerce and supply chain enablement platform that provides a suite of digital services like supply chain automation, vendor digitization, and embedded finance. The problem statement that we looked in these kind of spaces was largely the purchase orders or the invoicing or the goods movement. Everything was manual. In a typical example, any client who wanted to procure some material has to give a physical PO, has to deploy a sales team, manpower on the ground, hunt for the vendors, hunt for the right people who can supply the right amount of goods and in the right shape and quantity. So everything was pretty manual. Everything was pretty much longer time duration taking kind of activity. So this is where I think B2B startups, including BIZONGO, came into picture, where we kind of digitize the entire ecosystem in terms of raising the POs, hunting for the right vendors, giving the visibility to the client and to the suppliers in terms of what are the POs, what are the kind of pricing, what are the kind of price exploration that can be done, how the inventory management can be done, whether the goods movement tracking happens or not. So I think this was the value addition that the entire B2B startup community gave in to the community. And the pandemic was, I think, the right time when this thing scaled up pretty well. People got pretty much accustomed to the apps, to the web pages of such B2B startups, and started placing orders on took care of their movements of goods and everything. So yeah, I think as far as BIZONGO is considered, we are currently Series D funded company with a valuation of $600 billion. We currently work with about 300 large enterprises, which includes some of the marquee names like ITC, Reliance, Cargill, and so on and so forth. And on the other side, we work with about 7,000 odd suppliers in the industries, which are typically manufacturers and converters who kind of fulfill the procurement requirements for these large entities. So while these entities have been already connected with the large set of suppliers, the problem statement that we solved for them was kind of a one-stop shop for their procurement needs, giving them the entire visibility of whether the goods will be manufactured in time or not, whether the fulfillment will be done in time or not. Rather than chasing multiple such vendors across the country, BIZONGO becomes one-stop shop for the clients to in terms of raising the POs, raising the invoices, and also so on and so forth. The inefficiencies that we typically cater to is the manual search of vendors, initiating orders, invoicing, logistics. Again, embedded financing is one of the key offerings from our side, wherein we have partnered with multiple lenders, Jiraaf being one of them. So that's how the entire ecosystem works in BIZONGO. We have also set up our in Singapore entity some time back, where the idea was to make a procurement hub out of Southeast Asia. And that's how we have been scaling up. As on date, I think we do close to $1 billion kind of a GMV on an annual basis, and expecting this to go further in the coming years as well.
Great, Ankur. I think that has been a really fantastic business model and a journey that you guys are on. Can you talk a little bit about the scale over the years that you have achieved, and what is that you are expecting in the coming year?
Yeah. So initially, when we started the business, I think packaging was the primary industry wherein the kind of supplies were pretty much fragmented. I think today also you would not find any manufacturer in the packaging space which would be having a turnover of more than 1,000 crores or something like that. So I think packaging was an excellent use case for us to start up the entire project. We did this inventory-led model for quite some time, and I think post-pandemic or during the pandemic itself, we shifted and came to a build to ship to kind of a model wherein we don't hold an inventory or we don't hold any kind of logistics or the risk of stocking those materials. Post that pivoting, I think since September 21, we have been into build to ship to model wherein I think last year we closed our overall top line with 2,200 crores, and this year we closed our top line in March with about 6,200 crores, and expecting this to scale up at least 2.5 to 3% month-on-month kind of a growth. Again, with the international operations exim, that will be evaluate another addition of some amount of GMV as well as we scale up the international operations as well.
Okay, that's great. Also, can you talk about some of the challenges that you face in this industry, and are there any mitigants in place that BIZONGO is working on or has come up with?
Yeah, I think challenges would be on two sides. On the BIZONGO side, the challenge, or in fact on the B2B startup itself side, the biggest challenge that any B2B startup would face is on the trust factor. Typically, the SMEs and the clients and the enterprises have a habit of kind of a touch and feel, getting the references in the market, then engaging with the customers. Maybe first time the deal will be on advances, maybe on the cash on delivery and all those things. Suddenly, a B2B startup comes in and says that we will take care of the entire engagement and get this done within half the time that you're currently spending on the ground and getting those orders. So I think trusting those kind of technology advancements and the adoption of those digital nuances was one of the challenges, wherein we have typically created product in such a transparency where suppliers and the buyers, and even for that matter, the lenders that we work with, have been creating a very transparent product and very transparent transaction value for them to scale up this product to a next level. The second is challenge would be finding the right GTM. So while we say that each and every startup has their own unique market space, some of them would want to work on the infrastructure side, some of them would want to work on the consumable side. I think finding the right GTM is one of the challenges which needs to be identified in terms of what can be scalable. So as far as BIZONGO is considered, I think we had identified 4 such sectors: packaging, textile, specialty chemicals, and agro, wherein we knew that the supplies are pretty much fragmented. There are operational inefficiencies in terms of procurement, in terms of clicking the right price, the bidding kind of a platform that we have developed. So these are the kind of operational inefficiencies that we removed from the tech stack that we have currently. Again, on the digital adoption was again one of the challenges with, I think, during pandemic, this has gone up drastically in terms of adoption of digital kind of using those apps, using those web-based portals to procure those kind of materials and getting engaged with the buyers and suppliers who may not have seen their faces ever in the life cycle. So I think these are the typical challenges on the B2B front. I think on the supplier and on the buyer side, the biggest challenge is how do you trust those kind of B2B platforms and get engaged with them? How do you put your money in those kind of startups and then probably take those liabilities in terms of repayments and all those things. So I think with the kind of transparency today the technology has given to those stakeholders, this is pretty much solved in terms of giving them the confidence that whatever trade happens is going to be genuine, is going to be kind of compliant in the eyes of the law, and so on and so forth. So yeah, I think that figure out the challenges that we currently have been facing, but it's not completely solved. Definitely, there are a lot of things, other things that needs to be done. There is a lot of contribution on the AI side as well, wherein there is an AI-based purchase recommendation, the invoicing kind of a tool which we provide to our suppliers. These suppliers are typically small MSMEs who have a tally kind of a system. They don't have an ERP. They cannot afford those kind of ERP solutions. So that's where we provide those kind of tech solutions in terms of invoicing, in terms of generating e-way bills, in terms of tracking those goods, and so on and so forth. So I think that's been the contribution on the technology side from BIZONGO that we have provided.
Okay. Also, you talked about the split of your business, that you have identified 3 to 4 segments, which are textiles, packaging, and the other 2, I think, specialty chemicals. Can you just give an idea, like what is the business split like across these 4 streams?
Yeah, so I think business-wise, more or less, the share of agro commodities seems to be on a larger scale. Again, textile being falling with the textile and packaging. Broadly, I think other than these 4 categories, we keep on experimenting with other categories as well. And as and when we build the kind of trust or the kind of use cases that we have, and whether we are able to identify whether this business scale up or not, we keep on adding those categories as well.
Okay, understood. Also, how do you think of planning your future growth?
Excellent question, Mudita. I think in the current business scenario, the BAU business that we run, it keeps on moving at its pace. And what we plan to do further is, again, going a step back and trying to cater to the suppliers who procure their raw material from the larger suppliers, right? That is one space wherein I think there is a lot of opportunity in terms of doing those bulk deals with the large suppliers, maybe the likes of Reliance or IOC or BPCL and so on and so forth. Wherein in a way it's a raw material aggregation that we would want to get into, and post that, I think that's the kind of goodness that we can bring in for the suppliers as well, in terms of negotiating the right rates, right kind of price for them. The second motion, I think, is towards also catering to the larger public who would not want to change their billing cycle from any other B2B startup. So for example, current model of BIZONGO is build to ship to, wherein a supplier builds to BIZONGO and BIZONGO builds to the end client. There are larger communities who would not want to dilute their overall cycle. They would still want to build to the larger entities like Birlas and Tatas and maybe Adanis of the world. This is where we are also extending our platform with something called named as FinPass, wherein we will be engaging with the same existing lenders that we currently work with, and try to accommodate those embedded financing requirements for the suppliers and for the clients, and bringing in those FIs, those banks and NBFCs to suffice those requirements. Again, the platform works as an intelligent way in terms of curating those data, giving those intelligent cuts and I would say, curated data points to the lenders to bring them to a level where they can underwrite those SMEs independently rather than relying on any of the B2B startups like BIZONGO giving a guarantee towards it. So I think that's one of the technology stacks that is getting extended in the next phase for BIZONGO.
So this is currently being worked upon.
Yes.
Okay. That sounds interesting. Should I also take a few questions from our investors? So Mr. Shantanu Mukherjee wants to ask, who is your biggest competitor and what's the risk that you see not being able to, okay. Is this for, it's not clear if this is for BIZONGO or not, but yeah. So who is your biggest competitor and how do you see tackling that?
So if this question is towards BIZONGO, I think the competition itself is, the industry itself is pretty much fragmented, right? As I said in my earlier conversation as well, there are a lot of startups, B2B startups, which are focused on agri, which are focused on textile, which are focused on infrastructure. BIZONGO being one of those kind of sectors which have their own niche space in terms of accommodating those kind of industries, right? In a way, if you talk about the competition, our business model is pretty much different from the other B2B startups that we currently work with. We are not an inventory-led model or an inventory-heavy model. And even if there is a competition, I'm sure that as we know that kind of the kind of strength that SMEs have in India, we have just touched upon the tip of the iceberg that we currently have. There is a lot of huge kind of a TAM available in the market, which is good enough for maybe 10 more B2B startups in the world.
Right. Another question from Mr. Shantanu Mukherjee is, what is the plan for the recent 25 CR you have raised? And how is it that you are able to, manage your costs and such higher IRR as 14%?
See, it looks to be a very pointed question on the 25 crores that we have raised. I'm assuming this is the one which we have raised from Jiraaf.
Jiraaf, right.
Yeah. So again, the philosophy is very simple, that we raise debt for our operational BAU business and not for any inorganic growth. So obviously this will go into towards managing that liquidity, managing that kind of cash balances with us, and for the growth of business. As far as the IRR is concerned, I think broadly the IRR is more of a function wherein you look at the lenders or you look at the FIs in terms of, one, operational ease of doing business, and second is on the IRR that you took. The mix of both actually comes out with a lower IRR than less than 14%, and that's how you deploy that money in the business. So there is a goodness and there is a flip side as well of each and every lenders that we currently work with, and that's typically, if you go to an SBI, they will give you a very low rate, but the operational ease may or may not be there. As compared to if I go to Jiraaf, maybe operationally pretty much easy, but the IRR would be higher. So it would be kind of the kind of choice that you make in terms of what kind of portfolio that you want to build in our internal company in terms of the funds that we raise or the debt we raise in the company.
Right. I hope that answers Mr. Shantanu's question. Mr. Vishal, who wants to know what is the business model for BIZONGO? I think we briefly touched upon that. And are there any fixed price contracts with the clients, or how do they charge the clients? Do you charge the clients?
So typically the business model works in a way where we negotiate a kind of a cash discount from the suppliers. That typically becomes our margin. So in a typical trade where a supplier would have supplied goods worth ₹100 to a customer with a 90 days kind of a cycle, with BIZONGO coming in between with an embedded finance kind of a facility, the payment to the suppliers happens upfront, post the confirmation from the client. And that's where we demand a cash discount of, say, for example, ₹5, and that becomes typically our margin in the entire business.
Okay, thank you for that answer. What is your annual growth and what is your market share in B2B segment? Mr. Parimal Tiwari wants to know that.
Our annual growth, as I said, that post we shifted or pivoted from a inventory-led model to a build-to-ship model. I think we have grown from a top line of 2,200 crores to 6,200 crores, and this year we expect a month-on-month growth of 2.5% to 3%, which would turn out to be maybe around 11,000 crores or something. This is one line of business that we're currently working on. There is a second line of business that we just mentioned about the FinPass, which is extension of the current platform that we were working on. Other than that, there will be international operations as well in terms of EXIM, where we have launched our Singapore entity in terms of looking that as a procurement hub and also acquiring international clients as well. So I think that's been the plan for the annual growth. Market share in the B2B segment, again, as I said, that each B2B segment is a different set of model, right? You cannot really compare apples with oranges in terms of what is the share of B2B industry-wise, what share do we hold. But broadly, I think we do understand that as far as the B2B startups are concerned, we are definitely amongst the top 3 or top 5 in this space.
Yeah, that's right. I think different startups are working in different spaces within B2B. So,
yeah.
How do you mitigate your collection risk? Mansi wants to ask that.
Again, collection risk, good question. I think on the collection side, any B2B startup would want to secure their collection because ultimately that's where the company is coming from. 2 ways of looking at this. Again, what kind of clients that you're currently working with? Are those kind of clients which are smaller enterprises, or are these kind of larger enterprises or brands of the world? As far as BIZONGO is concerned, I think our clientele has been the likes of Reliance, ITC, Cargill, and so on and so forth. Some of the enterprise clients as well, like Trident, or maybe the likes of Trident and all. So I think as far as your client quality is good, the collection is least of the worry that any B2B startup has to look at. Again, to further deep dive into this, we definitely hold a separate org of collections and credit, which typically is as robust as a lender's or a NBFC's or a bank's risk team, which analyzes and kind of assesses the risk with the client and gets into the nuances of whether there should be a particular limit given to the client level or not. So I think a combination of all these things would definitely help in terms of managing the portfolio, managing the collections, and managing the overall DPDs and defaults that happens in a typical B2B startup.
And definitely, I think in a business like yours, this team comes in as a very important part. So Mr. Harish Rangarajan wants to know that you have acquired 2 organizations in 2022. What was the objective and did you achieve it? Any more on cards this year?
Yeah. So I think the organizations that we acquired was one on the IoT devices, which is typically those devices sits on the a particular machinery of a particular manufacturer, which basis the vibrations gives you an output of what kind of production has been done in a day or in a week or so on and so forth. So I think this was one of the steps that we took in terms of deep diving into the MSMEs and helping them around utilization of their capacities, right? Typically on a customer side also, you would want to know what is the kind of production is happening. Now, typically what we have seen is that while taking an order, the supplier would definitely agree that he will supply X amount of goods on a particular date and fulfillment will be done on time. But there is no tool available or there is no intelligence available in the market that says that whether this fulfillment will be done on time or not. So these kind of IoT devices really helps in terms of giving us an output or giving us an intelligence that broadly, this is the kind of capacity that this guy is running, and this is the kind of new order that he can take in his kitty. So that this is something which is helping creating a visibility for the client and for ourselves as well in terms of timely deliveries and all. So I think this was a small acquisition that we did some time back. A few more are definitely on the cards once we do our further fundraise that is currently planned. And again, this will be complementary to our existing business as well.
That's helpful. Uh, Anumoy Kar wants to know, can you throw some light on embedded finance and how many lending partners do you currently have?
So embedded finance is typically, I mean, it's more of a jargon that comes out is typically into the B2B or B2C kind of a space. Typically, whatever transactions. Let's understand that what is a B2B or a B2C kind of a platform, right? It's typically a place where you connect buyers and sellers and try to do a seamless connectivity with those. Try to streamline the communications, formalize the communications, and further operationalize the overall data that is going through the platform, right? Other than this, I think basis the data that has been created. So it is all that game of the data, enriched data that you create out of that platform or out of the transactions. Basis that data, there is obviously a real-time data available to the lenders, which helps them in underwriting those kind of SMEs who would formally may not get a lending line from banks and NBFCs, right? Standalone, they may not have the credibility, or they may not have the right approach, or maybe not the right connect to those banks and NBFCs to get those lines and grow up their business. So B2B platform understands those kind of problem statements. They create a data stack. They create a kind of a curated data piece for those kind of lenders and forward it to those lenders for them to underwrite. I think one of those kind of initiatives, what even the government has taken, is on the account aggregator, wherein real-time availability of bank statements are available. The consumer can, or the SME can share the bank statements real time as on date to the lender and provide them the inputs. I think on the business side, which is on the transaction side, we have GSTs also, which is currently coming up with on the account aggregator side. But however, these are still GST is still in historical data. There is no real-time data that what has been the sale or purchase for that particular SME in last week or maybe last month. So this is where I think a B2B platform engages with those buyers and suppliers, create those data visibility, and this is where the embedded finance comes into picture, wherein while the transaction is happening on the platform, there is a financing play also available, that if a supplier chooses to get the payment early, he can definitely apply on the platform and get that financing done. As far as how many lending partners that we currently work with, I think we have sufficient number of NBFCs and banks, close to maybe 30-35 such odd lenders, FIs that we currently work with.
I hope that answers your question. Mr. Mohit Sachdev want to congratulate you, first of all, that BIZONGO has built the brand that it is today. And there's a question attached: is BIZONGO looking to expand beyond supply chain financing, automation, and vendor management, as there is a huge scope in lending that space too?
Yeah. So I think, thanks, Mohit. Thanks for the congratulations. I think, as I mentioned earlier, the current BAU business stays as it is, where we are still looking at a growth of 2 to 3% month on month. The further extension to the platform will be the FinPass platform, wherein BIZONGO will not be part of the billing cycle. This is typically for catering to those suppliers and customer cohorts who would want to still remain at the same pace, at the same billing cycle, but still are looking for financing kind of a need, or still looking for value addition services like goods movement tracking, like invoicing, like PO generation, and all those things. So I think we have already proved our concept in terms of creating that intelligent data on the platform, and this is just an extension to this, wherein the only difference would be that BIZONGO would not be part of the billing cycle. So I think that's one big space that we are currently exploring in terms of financing, in terms of automation, and the vendor digitization that we're talking about.
Right. Also, Ankur, we have a few questions on collections. So is there any historical data that you can share with us? Like how have the collections been in the past?
I think, as I mentioned earlier, collection should not be much of a worry for any of the B2B startups till the time you are working with pretty much graded clients, or pretty much decent valued clients, right? Ultimately, the objective is to cater to the SMEs who are not able to get the payments on time, or maybe they're getting the payments on time, but after 60 days or 90 days. So till the time your collection, your client base is good, where your actual receivables are being uh, figured out, I think your worry should be more towards having the right set of clients rather than understanding that what kind of SMEs that you're currently working with.
Okay. Can you let us know if your company follows any specific hedge strategy?
I think we've just started our EXIM business. Hedging is something which I think I'm sure the team will be working out. But I think on the BAU business, if you're talking about the foreign currency hedging, I think in the domestic business it doesn't apply. If you're talking about the hedging of the commodity fluctuations, I think we are not in that space where there is a dynamic upside or downside on a commodity whether we are currently trading into. So currently we are trading into textiles, specialty chemicals, packaging, and agri, which are not that volatile as compared to maybe oil, maybe polymer, or so and so forth.
Okay. Do you also provide any credit to your buyers, and do you take any debt to procure goods?
I think credit to the buyers, buyers being larger entities, I think credit already is there. They have their set repayment periods or repayment methodologies that we currently follow. Do we take debt on our books? Obviously, yes, we do take debt on our books. That's part of the BAU business that we currently run, and that holds pretty true for all the B2B startups that currently are in the market.
And I understand you don't maintain much of inventory.
So idea is to maintain debt in terms of more of an inorganic growth, more towards the expansions that we plan. I think the currently engagement with the 30-35 NBFCs and fintechs that we have, it's sufficient enough to fuel our current growth of BAU business in terms of making those payments early to the vendors.
Okay. Also, can you elaborate a little bit? How do you underwrite the risk with respect to your customers? And how do you choose what is the process, who to work with and who not to work with?
Sure. I think underwriting philosophy remains the same as you're underwriting any loan proposal in a bank or an NBFC, right? What we typically focus on is on the current situation of the company or the corporate. And ideally, if you're working with a rated company or maybe the likes of maybe ITC or Cargill, I don't think underwriting becomes a major category out there. It becomes more of an operational structure that we currently work on. Wherever we work with non-rated entities, which are pretty large in space, but they are not maybe rated, that's where we do analyze those historical financials, historical transactions, the current trade structures with those suppliers. So we typically, just to add on what we currently do in terms of risk mitigation, is that we currently work with only vendors which are associated with these buyers. We are not currently into vendor exploration kind of a model. So there is already a transaction history available between the vendor and the supplier and the buyer. We leverage on that data and then come to go to the NBFC or the bank that this has been the historical data between the buyers and the suppliers, and that's great, gives a confidence to the lender as well that there has been an existing relationship, there has been a history of goods returned or maybe goods rejected and all that. And this is that the call is taken by the lenders. So that itself, I think, gives a lot of confidence to the lenders in terms of financing those platforms, or even in fact us also in terms of taking that exposure on the clients. Further, I think as any entity or trading entity would do, we definitely take the required securities in terms of maybe bank guarantees, maybe FTs, maybe FD lien marking, or maybe PDCs and NASH and so on and so forth. So I think that's pretty much covered in terms of getting into any kind of lending transactions that we look at the transactions currently.
Another question we have: how do you compare a B2B platform with bank lending system?
So there's another question should be that why do fintechs currently exist in the market, right? I think the answer should come from the fintechs as well. The philosophy remains the same, that there is an data which is created, there is an curation of the data points that a fintech or a B2B platform creates, right? It is not only creating a reach for the buyers and suppliers in terms of the supplies of the goods. It is also the data that we create in terms of what kind of transactions are happening between the two parties. So that itself gives the answer that why are we different, or why any B2B platform different from a bank lending system. Banks have their own way of looking at the SMEs, or looking at the customers, the clients. Supply chain finance typically was a luxury between the likes of maybe AAA rated companies like Tatas and Birlas. Supply chain finance was never kind of a product available for the SMEs, at least not 3 to 5 years back. B2B platforms have been engaged into getting those kind of data points for the SMEs to build that confidence for the banks and the NBFCs. And that's where I think now this product is available to the larger public, or maybe larger SMEs today.
Okay. Mr. Vishal, who wanted to understand on the bottom line, is BIZONGO PAT positive? If no, how is the cash flow being managed?
I think pretty much data is available on the public domain as well. But just to give you a brief, I think we have a decent amount of top line that we have closed in the month of March, somewhere around 6,000 crores. And we are on the verge of being PAT positive. I think very soon we will have that as well on a monthly basis. The key drivers to this is obviously the right set of clients that we acquired, the right set of lenders that we are currently working with, the overall cost control that we have managed in terms of the fixed expenses, or in terms of interest cost and all. So I think the combination of all this should lead to the right profitability of the company as well.
Can you throw some more light on your gross margins, your EBITDA, etc.? Mr. Swapnil Seth wants to.
Yeah, so it's again different from industry to industry. While I would not be commenting much on the margins, the exact margins, I think depending on the industry, depending upon the cycles, depending upon what kind of products that we deal into, I think gross margins are pretty much decent in terms of at least us being at a level of EBITDA positive today, and maybe soon enough at a quite positive level as well.
Okay. I think this one has been taken earlier, but can you briefly explain the product lines? Mr. Parimal Tiwari wants to understand this a little more.
So product line, typically, as I said, that we cater to the 4 industries that currently working with textile, packaging, specialty chemicals, and agri commodities. Again, being very specific on the textile side, I think we work with majorly with apparels. On the specialty chemicals, I think we cater to the pharma industries as well. Product lines as such, I think industry wise, these are the 4 industries that we work with. Product wise, I think majorly consumables is our target, right? It is not something that we get into a kind of a machinery lending, or maybe something like a captive capex kind of a product and all those things. So it is more towards the consumable side that we currently work with, which has a faster turnaround time, which has a faster procurement cycle, and a repayment cycle as well.
Okay. I think this has been very helpful for us, and I hope for the audience as well. I think there are no further questions. So I would like to thank you, Ankur, for your time, and thank everybody who joined us today, and especially in such good weather. So
thanks, Mudita. Thanks. It's been a great honor to be on this forum.
Thank you, everyone.
Thank you, everyone.